India's digital Mandir rush, why JPMorgan and Sequoia are quietly mapping a $50 billion faith tech. That single number resets the tech playbook. The key question is not what happened, but what changes next for operators and users. We will map trigger, incentive shift, and downstream impact before the close. Not a think piece. Not a trend report. A formal institutional analysis titled Sacred Economics, mapping a $48 billion market. When bulge bracket banks dedicate that level of research to a sector, they're preparing client portfolios for exposure. But here's what most people got wrong: this isn't about temples going digital. It's about faith infrastructure becoming the country's most unexpected fintech distribution network. Let me show you what's actually happening. On May 3, 2026, a random Wednesday, temple management platforms processed 847 Indian rupees crore in digital donations. Not Diwali. Not a festival. Just an ordinary day when traditional banks would struggle to move that volume through rural branches. A farmer in Madhya Pradesh downloads an app to book a puja slot at Mahakaleshwar temple. She's simultaneously onboarding to digital payments, creating a verified identity, and entering a trusted commerce ecosystem. All wrapped in cultural familiarity. No intimidating banking jargon. This is the final mile financial inclusion problem that neither UPI nor Jan Dan accounts cracked. And institutional money is moving fast. Lightspeed Venture Partners led a $28 million Series B in Bhakti Sagar, a faith tech super app combining temple services, astrology consultations, and prasad delivery. The cap table includes what their sources call an unnamed sovereign wealth fund advisor. Translation: Gulf Capital is studying this playbook for Islamic finance markets. That's not accidental timing. Same week, NPCI confirmed they're piloting faith-linked recurring payments with 12 major temple trusts. This isn't subscription billing. It's infrastructure for ritual-based financial products. Imagine auto-debiting 501 Indian rupees on your child's birthday for a temple offering. That creates payment history. Payment history underwrites microloans. Suddenly, a 45-year-old woman in rural Karnataka has a credit score built entirely through spiritual practices. Now here's where the structure gets interesting. This is a multi-sector collision happening simultaneously. On the financial services side, traditional banks failed. Despite massive government push, they couldn't penetrate Tier 3+ cities. Temple apps are succeeding because they're not asking users to understand banking. They're asking them to continue religious practices through a more convenient interface. The financial behavior change is a byproduct, not the pitch. One undisclosed platform reports 67% of users making their first ever digital payment through a temple donation portal. Identity verification is the second layer. Aadhaar provided infrastructure, but rural users lacked digital literacy to leverage it. Faith platforms became the practical interface. When you book VIP darshan, you're completing KYC. When you receive video of your booked puja, you're verifying biometric presence. The religious context makes this culturally acceptable instead of surveillance adjacent. Logistics is the third. Prasad delivery networks being built mirror what Swiggy and Zomato spent billions creating, but with one critical advantage. Spiritual products have infinite repeat purchase frequency and zero price sensitivity for quality tiers. One Varanasi startup processes 14,000 prasad deliveries daily. That creates last-mile density that can layer in pharma and FMCG delivery at marginal cost. But here are the three forward implications that matter. First, this geographic arbitrage window closes in 12 to 18 months. Southeast Asia is watching. Thai Buddhist apps, Indonesian Islamic fintech, Philippine Catholic service platforms will launch by Q4 2026. The first mover advantage isn't technology. It's cultural trust building and regulatory navigation. Indian startups without locked temple partnerships by December 2026 will face commoditized competition. Second implication, 24 to 30 months out, new financial products. Devotion-linked savings accounts launching mid-2027. Structure is precise. Auto-transfer 100 Indian rupees per month to temple donations, earn 7.2% interest versus 6.5% standard savings, receive tax deduction under Section 80G, unlock priority darshan privileges. This isn't hypothetical. 3 major private banks are already in discussions with temple trusts. Third implication, and this one's critical, data privacy collision course within 18 to 24 months. When spiritual practices generate monetizable data, which deities you pray to, which astrologers you consult, which festivals you prioritize, India's Digital Personal Data Protection Act enters morally complex territory. The first major faith data breach will trigger regulatory scrutiny by Q1 2027. Temple trusts will demand data sovereignty before granting API access. There are risks nobody's pricing in. Regulatory ambiguity. Temple trusts operate under state-specific endowment laws written in the 1950s and 1980s. No clear framework for when a temple service app becomes a payment platform requiring RBI licensing. The first crackdown sends valuations tumbling. But it also creates consolidation opportunities for compliant players. Cultural backlash potential is real. 3 prominent religious leaders issued a joint statement on May 5 cautioning against commodifying faith. This isn't Luddism. It's legitimate concern about sacred experience dilution.